you a weekly chart, and yeah,
Yep.
I've got the same exact trend line anchored
Yeah.
from that 2021 high,
Yeah.
and it's running right along there. There's no reason to think that this is going to somehow blow it away and come up above. It's still an expensive stock.
You think
I mean,
so?
well, let
Let's
me look at
let's take a
the
look at the price
PE
to
and stuff.
sales.
My apologies for not being completely ready with everybody here, but let's see, Nike.
No, you're good. You are
My
good.
my preferred, and I think I tell you guys this, I prefer seeking alpha to just look at the fundamentals. By the way, your the legends of investing, that page that you guys did,
Yeah. Like
if
it?
you're here and you're not subscribed and getting that, oh my god, it blew my
Nice.
mind with just, and I know you guys have had these there, but putting it in that perspective, and then for the last 2 days since I got that email, playing around with it, it
Yeah.
blew my mind.
Yeah.
Absolutely blew my mind how good the tool is. But it's 39 times forward earnings.
Yeah.
The forward
Yep.
PE is 39.
Which is like, I don't know. For in this market, you got Palantir trading at whatever it is trading insanely higher than that. So it just really it's all relative. But yeah, if you guys didn't know what Gary was talking about, we did drop this Legends of Investing collection on the store. And it's basically exactly what it is. It shows you several strategies from major traders. You got Minervini in there. We got Peter Lynch, Nicholas Darvis, Benjamin Graham, Warren Buffett. A lot of them are scanners, based on their own criteria. So of course, Benjamin Graham is going to be a deep value screener.
Well,
Got
and
the
I got to
Warren
tell you,
Buffett. Yeah.
the Peter Lynch GARP, growth at a reasonable price, it pulled up Micron this morning.
Oh yeah.
Yeah, Micron was in there. And that's what I was live on YouTube this morning, and going over, hey, growth at a reasonable price. It pulled up Micron. It was crazy.
That's nice. Let's take a look right here. See what it's pulling up now. MIRM. I've seen this one. Let's see. Goog is in there. That's interesting. Goog.
Yeah,
It's
yeah,
been coming down a little bit. Everything's been coming down a little bit late. The market's been a little bit more bearish. Today was pretty nice. A little bit of a bounce back to the upside, but yeah, decent results in here for sure. I've seen this ALHC one a couple of times as well. This is on one of my other scanners. This was actually one of the ones that we found in that small cap investing webinar I did a way while back. But yeah, MU up here, up 10%. You guys didn't see MU. They reported earnings yesterday after the bell was live for that.
And Western Digital and Upstart, which I've been trading, for this year.
Yep.
Upstart, not as much, but Western Digital, I put that in a watch list back in August.
Yep.
And just look at that percentage. That's one of the leaders with SanDisk and Seagate.
Oh yeah.
So, and by the way, back to Nike, Birkenstock reported today.
Did they?
And that BIRK. So it's another shoe company.
Oof. Yeah.
Just to give you an idea. Down 11%.
Totally forgot this was actually even traded, to be honest. Yeah, that's not looking good. But I mean, they've only been traded since 2023, and they're trading under their IPO open now.
Yeah. Yeah. And did you see that medical company that IPO'd yesterday, the biggest one? MDLN, I think it is.
Actually did not.
Let me see. Yeah, Medline. It was the largest 2025 IPO.
Up 15% since its IPO. Nice. Medline. I did not see this. I have not seen this.
You're not subscribed to my newsletter.
I can't. No, I don't think I am. I should. I should. I need to. I would have been on top of this. But dude,
I watched your interview with Shandy, Dr. Shandy.
Yeah, I've done a couple of them. He's awesome.
About when to sell.
Oh yeah, you're talking about the clip I posted?
That was so good.
Right? Yeah, I love picking his brain. I love picking his brain. He was a trader back in, well, he obviously is still a trader, but he was like a CTA in like the 90s trading futures. So yeah, super smart guy. He has tons of indicators on the platform. Yeah, highly
Yeah, hit,
recommend.
I mean, and it's super simple. On my newsletter, I've got one of my top newsletters is when to sell. I teamed up with this guy, My Weekly Stock Pick, who's a, I'm my daily stock picks. He's weekly stock picks. So he
Okay,
said, "Hey, we
nice.
should do a collab together." So we did a collab, and it was written in 2024. But Shandi puts it great. If you're just kind of out there investing and the 50-day starts to move negative and it goes under the 50-day, he brought that up with Cisco.
Yep.
Um, Back in 2000, it was a perfect kind of exit on that one.
It is. Yeah, it can be very simple. You can do tons of different indicators. That's what he's saying. It doesn't matter whether it's a 50-day moving average, whether it's one of his, crazy parabolic stop losses that he has on his custom indicators, whatever it is, it can work as long as you just stick to that same one. Like, yeah, we're looking at Cisco specifically back in obviously like the 2000.com bubble.
Yeah.
Pulled up right here. Throw up even like an SMA 100. I think the 50 is probably a little bit better if you're using like as a stop loss. But I mean, if you literally just use this as like you get in when it gets above it, maybe you got stopped out there, you could have got back in. But I mean, it gets you out pretty damn good right there. And it's similar to the Weinstein stage analysis. Like that uses like the 30-week SMA, which is a little bit faster. So the
Yeah, I
same
love
kind of
that.
stuff. Yeah.
I started using on my second workspace. And again, Mike, I use this as one of my 52 kind of annual lessons that we do.
Yeah.
But I saw on my second workspace, I started using the go no go indicator
Yeah.
and the Weinstein, and it's helped me kind of understand what stage some of these stocks are in.
Absolutely. Yeah, Go No Go
Yeah,
is cool. I had Alex Cole on, the co-founder of it. Very nice indicator. Just the newer one, this Trend Pro, actually just shows you where the go and no go signals are, which is helpful. And it looks like on Nike, it just plotted a go. And one of the main things I learned about this one is that it really, follows along with key levels he was saying. As you can see, there's like a clear pivot level here on Nike at 66 or whatever, and it reacted there a couple times. And once it broke over that, you get the go signal right there. So it kind of just makes sense. And yeah, I think it's a solid indicator to have on your charts. Obviously, if you're trend following, this Nike has not. It's been super gappy, really just trending to the downside mostly, if anything. So if you look at something like, I don't know, STX, I'm sure, yeah, go right above that 50-week or 50-day SMA now. Actually, another one there. So, yeah.
And I'll tell you what, on my QQQ, and you and I have talked about this. I just like putting horizontal lines, and right now I've got a horizontal line between 585 and 633. There's a double top at 633 on QQQ.
Oh, QQQ. Let's take a
And
look.
it's 633 and 588 is kind of where I've got the two things. And 588 just comes back to, it was a high that pulled back in August. And then it, kind of used that as support back in November.
Yeah. Kind of funny. I love just like having the drawings on my chart. Earnings are going to come out in a second here, but look at this. We had the fib levels from the prior all-time high to the April low, and look at the golden fib extension, the 618, 1.618. It was right there, pretty much the top. Always kind of fun to see that. I'm pulling up Nike real quick though.
Yeah, I was on a panel with somebody who said charts are just what do they call it? The astrology stuff. And I said, you got to be kidding me. I said, the reality is it's helped me. I lost 50% of my freaking portfolio because I didn't use charts enough during COVID. And then as I started to get into charts, it allowed me to get back in.
So what is he using if it's not charting, like fundamentals? And bell just rung, by the way. Bell just rung. Let me check what exact time we're going to get the earnings release from, or at what time, I should say. Nike should be coming out. We also got FDX 15 after. FDX is 3 after. So we'll probably get a move on FedEx first here. We'll pull that one up.
In my ear, I don't know if I don't know if you heard the Trendspider alerts. I have a bunch of alerts, Trendspider alerts, and in my ear, I just got the dana dana
Yeah.
dana.
Yeah. What we got? What kind of alerts?
Let's see. I'll tell you what's on. What are the alerts that triggered? Let's see. Just now, buy Meta on the 4-hour algorithm.
Nice.
That seems to be the only alert that triggered.
Okay. So you get them after the market closes.
Well, it's on that 4-hour algorithm, so
right.
it's a buy at 664. I mean, I'll fill you in on my decision making. I see if you go to a 4-hour, I've got a gap snake on Meta, and there's a gap between 680 and 740 during their earnings where it just gapped down.
Yep.
We've got confirmation over the 9-day EMA. I did buy a bunch at around 600. I think I put in like a couple $100,000 into that and around 600. Well, for me, this is the thing. For Meta at $600, you can't tell me that Zuckerberg's not the most lean CEO out there. And he knows what will move the stock price. And the thing that's going to move the stock price is him stopping the spend.
Yeah.
And at $600, I said, I don't think this guy wants the stock under $600. And what did he do after it got under $600? He said, hey, we're going to cut the budget for Meta Labs.
Yep.
Or whatever.
I did see that. Yeah.
So
it's probably a smart idea. I mean, I kind of like the idea, but at the same time, it's just like put a lot of money into that. Hasn't really done much. I do love the Quest. I actually had the Quest 1, was considering buying the new one. They're really fun. I'm not going to lie.
Really?
I actually kind of enjoyed it. Not going to lie. I mean, it's great. I love the boxing game. You get such a good workout, and it's actually really fun. There's also like this other game I played on there, and just the ability to like watch stuff in VR. It's cool for a little bit. It definitely dies down, but I think those things are definitely going to be more useful in the future. Especially I like his glasses too.
Yeah, I mean, he took the route of, we're going to provide you less than the Apple Vision Pro, but we're not going to charge you $5,000. It's going to be a couple, $700 or something.
Yeah.
So,
yep. Exactly.
Yeah, and I like, I wouldn't be on these sites more than like once a day if I didn't have a podcast and some social, people who write to me on these things.
Yeah.
But every time I go on there, I wind up just sticking. What are you doing with that Trendspider, that sidekick? You can move that?
I'm just moving it over here.
I didn't even know that.
Well, you can move it?
I was looking at my, I didn't know you could move it. I just always have it on full screen.
Did Nike? Someone just said Nike released.
Did they release early? Let me see.
Really? I feel like the stock would have moved a little bit.
No, Nike's coming out at, let me see.
Should have been 15.
415. Yeah, 415. It is. It's not out yet.
Unless it was leaked or something. FedEx is supposed to be coming out like a minute ago.
Let's see. I'll look at FedEx.
Not seeing it for FedEx yet. Maybe it'll be coming after like 5 after the bell. Who knows?
Yeah, FedEx is 403, but it doesn't seem to be out yet. And you've got HEI.
Yeah, I saw that one. HEI. Yeah,
that's at 415 too.
The revenue growth is pretty good.
I'll tell you what. So anybody on this listening to this, I'll give you some insider information. Carnival Cruise Line. Now, I partner with you guys and Seeking Alpha, and the deal that Seeking Alpha has with the Alpha Picks portfolio, it's a portfolio that just beats the S&P, and it's legend. I mean, it's so good. It's like the S&P is up 80%, and during that same time, this portfolio is up like 220% or something. And Carnival Cruise Line, they report tomorrow morning. And I will tell you, since the Alpha Picks portfolio picked Carnival Cruise Line, when did they pick it? In November of last year, it's up 30%. But the stock is considered a strong buy in theirs. So fundamentally, it's a really good stock. Now, you've got that double top right there. If I were to draw a line on that chart for Carnival Cruise Lines. I would say, let me see. I'm going to go to mine to see exactly where that is. What is that? Around $32? Yeah.
Yeah.
So the stock was trading earlier this week at around, I think around 27. And that was where I said, okay, I'm going to take a smaller position to add to my position because I asked Sidekick, what do you think of Carnival Cruise Lines?
Was it bullish?
And it was bullish.
Nice.
It was bullish. And I said, with Seeking Alpha being bullish, with Trendspider Sidekick being bullish, my 4-hour algorithm has you in at 26. And that kind of $30 range, I'm kind of thinking, okay, maybe I could get, if I buy at 27, which I have a horizontal line in there, if I buy at 27 or 28, maybe I could pull out 10% on that one. Yeah. So that was my earnings play this week.
There you go. And they are reporting tomorrow, you said, right? So
tomorrow morning. Yeah.
That'll be fun.
And my parents are going on a Royal Caribbean cruise.
I heard that one's way nicer.
Yeah. I own both. I own both stocks.
Nice. I just don't like the actual cruise experience, I guess. I know it's probably more expensive. I went on a Carnival cruise once a few years ago, right before COVID hit. It was fun.
Only cruise I've been on. I went around the world for a semester at sea as a college kid, which is, I'll never go on a cruise that even rivals that one. But I went on a Virgin cruise. My friend's cousin is the CEO of Virgin, and I got to steer the ship.
Virgin?
Yeah, the Virgin. He's the CEO of Virgin Cruises. And so when they were launching Virgin Cruises after COVID, I think it was 2021, 2022, somewhere in that neighborhood, we went on one of the first cruises. It was still like half empty. And they let me steer the freaking boat out of Key West.
That's funny. That's cool, though. That's sick.
Yeah.
See it. We just got FedEx earnings, by the way.
It's popping.
It's it's popping. EPS beat, sales beat, double beat. You got 482 on EPS versus the 411 estimate. Sales at 23.5 billion, beating $22.79 billion estimate, and it's currently trading up about 3% from the close, which is very nice. Cool.
Wait, Peter Griffin down there, who's probably eating a donut while he's listening to us, says, I don't give a shit about cruises. Stay on topic with Nike. Peter Griffin has never worn a Nike shoe in his life. So I don't know that you necessarily care about Nike, but yeah. And by the way, that's my opinion. My opinions are not Trendspider's opinions. So please don't take them the same. Right. But Peter Griffin, take the donut out of your mouth. We'll stay on cruises for a little while.
I'm dead. And CCL coming out tomorrow morning should be fun. That is, I used to trade that stock a little bit back in, I think, the.
By the way, I do have a little contention with you, Mike. You stretch these candles. That FedEx candle, the entire 1 minute candle was 1.5%. The way you look at your screen, I'm thinking, good God. That's like a 50% move in this stock.
I do that on purpose. If it was just me not on the stream, I'd be over here on the daily chart. But I know we got people out there in the chat and calls and puts and whatnot. CEF, what is the question? You can let me know.
I have a question for you, Mike.
Look at FTX, though. Beautiful trend. Throwing one of Shonday's indicators. You can see it's been trending up really since the end of October, basically since Halloween.
I've got a 50 on a weekly chart. I've got a 50 SMA and a 200 SMA, and the 50 is starting to turn around.
Let me take a look. Where's my SMA? Did I remove my SMA? Here, let me add it real quick.
I don't know how you do it, but and I've told you before, when I change stuff, I have to go to different workspaces to do stuff because I always screw up my damn thing.
Are you talking about the 50 week? Yeah, it's starting to curl up there.
Yeah. It's literally bouncing off the 200 week. If you put the 200 week up there at the same time,
the
200's already kind of positive, It's been kind of just flattening out, but it is positive. And it looks like the 50s kind of, I thought the death cross was coming on this one, but obviously with
Weekly
it up,
death
let's see,
cross.
3%.
They just had a golden cross recently here on the daily.
Oh, on the daily.
The daily chart. CF, what were you talking about to show again? Let me know. Let's check out Nike. It should be, what time is it? 5 minutes probably until this one gets released. Still don't see numbers there, but on FDX, we did get a double beat. Let's see. FedEx shares trading higher. Raises guidance as well. FedEx raises 2026 guidance on their EPS to, what is this? Looks like they raised it a little bit. 17.8 to 19 versus 18.22. It doesn't seem like a crazy increase, but always good to see raising guidance. Also, sales guidance was raised
They need
slightly
this
as well.
because their average Wall Street price target is 286, and you closed at 287 today. So imagine if they didn't beat and raise.
Yeah, right. Let's actually put on that indicator. Analyst estimates history. Yeah, I've seen the average on this indicator at least around 290, 295. And this is the analyst estimates history indicator. If you guys are on Trendspider, all you have to do is type in analyst estimates history into the indicator window. Click on the one right there. You could throw on maybe the weekly chart. Let me hide these other lines. And then it's going
Honest
to
to God,
you,
Mike, one time I went into that indicators list and I was like, okay, I don't even know what. There was one subscriber who signed up and they said, hey, I don't exactly know what I'm supposed to add. And that person signed up for the base level of Trendspider. And I said, that's why I recommend that top level with those 52 trainings per year when you have it on the holiday special.
Yeah.
Because what your guys are seeing on this screen right now, me sitting down with Mike, this is what you get with a training with a Trendspider expert.
Yeah.
So the people
absolutely.
who are like, I don't know what I'm doing, and Mike is so good at this and blah, blah, blah. I don't think you don't do training. It's James and those guys that do trainings, right?
I don't do the trainings. No. Yeah. We have a whole customer support team dedicated to it. I'm just a public trainer. That's
Mike is my trainer.
Yeah. Yeah.
I don't get the other guys on my,
I'm Gary's dedicated support.
Yeah. I saw you had Scott Redler on the program yesterday.
Yeah. Yeah.
Nobody loves Scott Redler more than Scott Redler. he's the Jimmy from Seinfeld, I think.
Yeah. Yeah, he was cool. It was the first time I met him, first time I talked to him. Cool guy.
Nice guy. Yeah. He knows his shit. I will tell you that guy. I give credit to him because I'm on spaces with him sometimes. And what's interesting about it, and he brings this up all the time, I give anybody credit who trades for a living. There is no way I want to earn my mortgage money each month to pay my mortgage trading. That's way too much stress for me. And he's got members in his group that do that.
Yeah, it's tough. It is tough. I agree. I wouldn't want to do that myself either. I think it just changes your mindset. Like, it's not a bad, like, if you can do it, you can do it. But I kind of like to see it as more of a longer term type thing. Like, I wouldn't want to rely on it, like you said, to pay my actual bills, because then I feel like I would get way too emotional in my trades. And
I went out to lunch with a guy who listens to my podcast today. He and I are business kind of folks, and he listened to my podcast and he's like, did you actually used to trade to pay your bills? I said, no, I've never been one of those people. I said, I would die. And he was telling me, he says, I just can't trade anyway. He goes, I just want to pay somebody to make me money. So he pays an advisor.
Oh,
so
no.
Yeah,
that's fair.
Oh. Where's the Diddy dance? Where this is when Tupac died and he comes out on stage and he does this kind of thing. That we're celebrating the death of Nike right now.
Oh no.
Now that's a big candle.
Yeah,
that's 2%. So it's a big enough candle for 2%.
At the very bottom is 4.6. Now we're at like 1.4. Let's see if we can refresh this thing and get some numbers going. Also,
Where's your news? Where's your news feed from? You guys do Reuters or?
We got a few different ones. I think it's mostly from Benzinga, but there's a few different ones that I think we like have access to or pay for in some way. I see a lot of Benzinga ones though. Not actually sure what the other news sources are, but let me take a look at what Sidekick, I think this is for Nike. Yeah, let's see what the final verdict Sidekick gave us. While beat history is strong, the year-over-year declines are catastrophic and options flow is overwhelming defensive. If it beats and dips to 62 to 64, that is your entry. Look at that. It dipped right to that exact price. Buy now exposes you to minus 10% gap risk on any guidance miss. So let's see what happens.
That's crazy. If you had set up a buy at 62 based on Sidekick and a sell at 66 because it just hit 66.35.
Yeah,
I mean,
that would be nuts if you got.
If you had set that up for a 2-minute kind of trade.
Just waiting for these numbers because it did say if it beats and dips. So if it didn't beat, we'll see. But I mean, it would be very hard to trade that in real time anyway.
I'm not seeing the numbers yet.
Yeah, I'm not seeing them quite yet myself. We'll probably get them shortly. Someone has them. Someone has them out there. Let me refresh this page. Yeah, I don't think I'm seeing it right now.
I'm not seeing it anywhere. I've got several sites up, and I'm not seeing the numbers. But obviously, there they are. Okay. Revenue beat by 2%. Earnings per share beat by 43%. Ooh. So it did double beat and dipped.
Okay. So, I mean, yeah, that's exactly what Sidekick was saying. If it beats and dips, that's your entry. Wait for
that's a 43% beat on earnings per share.
That's nuts. And look at this. The analyst estimates indicator, it's below all the analyst price targets. Even the lowest price target is like 68, it looks like.
And when's the last time you bought Nike shoes? Anything Nike?
I actually have a lot of Nike clothes, but I don't really buy clothes in general, so I'm a terrible person to ask. But honestly, when's the last time? I can't remember the last time I actually bought Nike, but I do like Nike.
It's Puma.
Nice.
See, I got Puma.
Yeah. I like their shoes. I used to have a pair of their running shoes that I left in Chicago when I moved back because I didn't feel like they were old. So I'm probably getting a pair of Nike shoes for Christmas from somebody.
I told people give Trendspider for Christmas. It's the gift that keeps on giving.
Yeah, absolutely.
It's better than underwear.
Yeah, I'm not one to go out and buy clothes very much.
But Mike, that trend line that we draw, you still haven't broken it.
Yep, not even close. Well, yeah, no, not even close. Hasn't even tested it really.
Yeah. For me, I'm just like, there's two apparel stocks that I've followed recently. It's Gap and Abercrombie and Fitch, A&F. Mm-hmm. And A&F has just done crazy well. I've had it on a watch list for a while. It dipped down, and now it's just started to come back.
Wow. Yeah, that one's crazy. Wild chart here. It has been honestly flying since. Is that a power earnings gap? Pretty much. Yep. Yeah. Power earnings gap. Even if you got on it anywhere during this trend, you really have not taken any drawdown, which is nice.
During a down market. That's the key.
Yeah, for sure. Let's put on the relative performance indicator and see.
Oh, yeah, look at that. I need to get that.
Yeah, relative performance indicator. If you guys don't know what relative performance is, you can get the indicator. It's on everybody's platform. I believe it's built in. You just type relative performance into the search bar, and you just click on it. You'll probably only have one, but then you'll see it down here, and it comes with a number. By default, it's SPX yearly. Right now, it's 89.5 on ANF, which means it's outperforming 89.5% of the S&P 500 on ANF. You can change the benchmark to something else, like same sector. So if you want to compare ANF to the same sector, which it puts it in consumer discretionary, outperforming 85.9% of consumer discretionary stocks. This is what a lot of people use to find trend following plays, because you basically want the stock to be outperforming the broader market so that you can hop in. It's kind of something that Shonda helped me out with a lot with his chats indicator, which is another similar metric. Chats over here.
I just did Chat's 70 scanner. I think Jason had built it, and I had it in my thing, so I shared it with my crew today with a couple of stocks, and I think ANF was one of them that showed up.
It should have been, because it's at like 92 right now.
Yeah,
you can see it's pretty similar, but Chats is Shonda absolute trend strength, so it doesn't compare it to an index. It compares it to itself using stuff like rate of change.
People seem interested. Let me give you a correlation of what I think of Nike. Nike is like your hot cousin. Okay, you can make out with your hot cousin, and maybe it feels good for a little bit of time, but the reality is that emotional scar is going to stay with you forever. It's something that just is not good. So Nike, it's your hot cousin. Don't make out with it. My guidance. It's not financial advice.
That is hilarious. But yeah, Nike, we'll take a look again. But they did.
Are you
as
posting?
You guys can see,
wait, when it's Trendspider in the chat, is that you posting, or do you have some mod in the background?
We have someone else posting as well.
I have,
okay. We have our social guy posting to our X and the YouTube, because he's on the X and the YouTube.
Your social guys, by the way, Dan, they deserve a raise. They're doing awesome. They're way funnier than I could ever be.
Yeah. No, our social guy is definitely incredible.
Apologize to your cousin.
For Nike, you can see 53-cent EPS, beating the 38-cent estimate. Sales at 12.43, beating the 12.22 revenue estimate. I actually have a sidekick prompt ready to go here to summarize what's going on with Nike post earnings. And it's going to give me something similar to what this was right here. We got initially, this is the pre-market analysis, or pre-earnings analysis, sorry. And then now I'm putting in the same chat the post-earnings analysis, and it's going to show us what is going on after the move, and everything has already happened, which should be good. Let's take a look at, again, the 1 minute chart. It is currently trending down on a double beat. And like we were talking about earlier, I mean, stock dropped to like 62, 63, 64, which is exactly what Sidekick was saying, and it had a double beat. So according to Sidekick, now is essentially the buy time.
Oh, God.
Yeah.
Excuse me while I just ignore Sidekick for that one. I mean, for me, I've always been one of those kind of social arbitrage people with Apple, with Google. When I started using those things, I started buying them. And it's been years since I've worn anything Nike. I think last year I bought a couple of Nike sweatsuits. And so I bought the stock for like 10 minutes. And I think I made like 5 or 6% on a pop. It was around this time last year. It wasn't much, but it's
definitely falling off.
It just doesn't make sense.
Yeah.
I'm looking through your Investing Legends scanners to see if I see any stocks.
Yeah, we can take a look at those for sure. But yeah, let's see real quick what Sidekick said post earnings. Make sure it did this one properly. EPS 53. Yeah, so 43% EPS be like we said, and 2% revenue. Verdict, wait for conference call guidance. Okay. It says market is ignoring the beat and selling China fears is what Sidekick is saying. That's why it's selling off. The 3% drop despite a big EPS surprise tell you everything is that guidance will disappoint or China deterioration continues. Don't catch this knife until you hear management's guidance. Yeah, I think that's solid. I think guidance is definitely going to be.
Well, and if you're dying for a shoe company, on the Warren Buffett scanner that you guys just put out, Deckers, DECK. And that's an interesting one because it's just kind of hovering around the 200 day on a 200 week SMA. MACD looks like it's juicy. RSI looks like it's juicy. From a fundamental standpoint, it's not the best, but none of these shoe companies are. I mean, Crocs, On, none of them are really great fundamentally.
Yeah. I'm going to say Nike just reported earnings and did decent on paper, but dropped. And the overall trend is still down. Give me some similar companies that have better fundamentals and a better trend to take a look at. Let's Sidekick what it thinks, and let's go over some of these stocks in the Warren Buffett scan as well. Which is a very nice scan. DRI, which is interesting. Like you said, DEC, I had that one up for a second here. On the weekly, it's pulled back pretty significantly from, say, it's just in 2025, just this year. Wow. That was a brutal year for this company, Deckers. It's down about 50% since the start of the year. And it's based up there, broke under that base. Yeah, it's just not looking great. It looks like it reacted to 2023's low and the 2021 high. Honestly, an interesting level right here on deck.
That horizontal line is what I got.
Yeah.
That's
so when you're drawing these lines, what are you looking for? You're just looking. I know what you're looking for when you draw them, but if you were to trade this, were you setting your stop loss below there, or?
Well, I don't use stop losses. Myself and Warren Buffett don't use stop losses, but I do use alerts. And in fact, it's funny because I have some people that sign up through me. They're like, well, how do you use the bots? I don't use your bots. And I think there's a difference, and you can tell me if there's a difference, Mike. I actually, in my strategies, go down and alert me the next time this happens for an entry and an exit. That's what I use as my, and I get a text and an email. And I think you guys had an outage like last week and my texts weren't working. And so I had to refresh those or something, but I still got an email, which was crazy.
So you do a scheduled scan?
Yeah. So, well, I don't even do a schedule scan. If you go into a strategy and into the strategy tester, just open up any strategy. And then in your entry next to those three dots, the three dots right there on the entry, alert me next time this happens. Nice. And then on an exit, alert me next time this happens. And those horizontal lines, I'll set, what I'm looking for is a previous run up and then a pullback. And if it has multiple run ups and pullbacks to that point, it justifies it even more for me. And if at some point in time, like this particular one, Decker's right there, it has that to the left-hand side, you can see it's got two run-ups up to that price. And then after those two run-ups, it just falls back.
Yeah.
But the key point is that then once it passed it, then it pulled back almost to that, which almost justifies that to me. Now you've got it sitting there as another pullback to that point, using it as support. Support becomes resistance, resistance becomes support. I mean, they flop around all the time.
Yeah.
And if you can touch that line multiple times, it gives it more validation to me that if I were to take a trade here at 100, then 77 is probably my complete downside where I'm like, okay, if it doesn't use it as support again and it goes through it, I'll probably sell at like 77 instead of 77.53.
That makes sense. Yeah. I mean, definitely the more times, I mean, this level doesn't exist unless price reacts to it. So yeah, the
Right.
more times it reacts, the more significant it definitely does become. Regarding your question about the strategy tester, that's actually a really good one. You can just set an alert. You can do that instead of setting a bot. But if you do set a bot, then you won't have to do that. It'll just alert you every time the exit and entry
Yeah.
signals. Like if I were to go, let's run this real quick. Deploy it as a bot, you don't have to set it, like to your broker. You can just do SMS, email, webhook, whatever you want. And then it'll be the same thing as an alert, except the benefit of a bot is that it does not expire. Depending on your plan, your alerts probably expire in about 99 days, which will usually be fine. But yeah, I guess the benefit of a bot is it's basically an alert that does not expire.
Yeah. And so I think I've had Trendspider long enough I'm pre-bot, if you will. And I just got used to that kind of, just the setting alerts. And
Yeah.
I will set an entry if I'm not in the stock. And if I'm in the stock, I'll set the exit. So I want to make sure I know exactly what I'm doing. So,
Yeah.
it's and like I tell people, just get a system that works for you. And that's a
Yeah.
system that
Yeah.
works for me.
Yeah, it doesn't really matter. I mean, someone is asking a question down there. Bots versus alerts. For me on the 4-hour algo, you set an alert, but it seems that it only alerts you on the strategy you choose. Yes. For a bot, you get the full strategy entry and exit. Well, I mean, yeah, it's the same thing. You just have to set an alert.
2 alerts, 1
Yeah,
bot.
2 alerts. Yeah, 2
It's
alerts on
like
the same. Yeah.
2 girls, 1 cup, 2 alerts, 1 bot.
Yeah. Yeah, or you could just run the bot and you don't have to worry about setting alerts. You just run it and it'll alert you.
Yeah, I don't know if
Anytime.
there's a limit on alerts. I mean, I have an older plan. I know I'm on an older plan. And I tell Nader all the time, you don't have to upgrade me. And I still want to stick with whatever sidekick messages I have. You don't have to give me more. I want to get what a subscriber has. You guys are nice enough to give it to me as an affiliate. I appreciate that, but I don't want any special treatment. So I stick with the alerts because I think my plan has like a limit on the bots, but I don't know if there's an alert limit.
Yeah,
And
it
my
depends on,
learning and my learning, Mike, is when I first had Trendspider, I went on an alert like just Ponzi. It was a scheme where I was setting at like 12:30 on hourly. I was getting like 16, 17 alerts. And
yeah,
it's too much. So now I limit myself to 5 alerts. And I'm like, okay, that's enough for me. And if I wind up getting more, the more alerts, like if I have like 10 or 15 set up, then I know I need to cut back my trading. And it's just, I'm doing too much.
yeah, that makes sense. Yeah, people keep asking about Nike. We did cover it, and what we came down to with our sidekick for anybody that's just joining again. Let me pull back up the
By the
chat
way,
here. Yeah,
Fatty Fat Man seems upset that we're not talking about Nike.
I know that's exactly who I'm talking about.
Yeah, we talked
Um,
about fucking Nike.
I know, you can't make
Fatty Fat
everyone
Man,
happy.
stuff another fucking donut in your goddamn thing. You've never worn a Nike sweatsuit in your life. Your name says it all. Try on. Maybe that's more your ticker.
Let me see.
Sorry, I get hyped up, Mike.
No, you're good. You're good.
Douchebag.
I'm actually going to look up Nike Investor Relations and actually see if they have a call coming up. They should probably have one soon. Their investor relations right here.
Let me see when the Nike calls comes up.
Yep, that's exactly what I'm looking for right now. Conference call. Here it is. Got to click on like 60 different links, and it brings you back to the same one. That's interesting.
Earnings info. I'm just going to ask. AI.
I got a news article here. Nike stock slips despite Q2 earnings beat. Outlook expected on the call. So the call will show us the forward guidance.
5 o'clock's the call.
Yeah. Yeah, it's usually so about like 20 or 30 minutes, basically. And then, yeah, same thing Psycho was saying. Nike shares are trading lower. The company reported 17% decline in Greater China sales. So that's a big thing that people are watching here is China revenue declining.
I just think Nike is way too expensive for what they have. I think they're a turnaround company, and I'd rather buy them. I'd rather wait for a 10% move to the upside just based on that trend line. There's a girl on YouTube that I follow sometimes, and her name's Tori Trades. And the girl trades platinum just based on a trend line. And she draws a bunch of trend lines and she trades it there. And so trend lines are super, super, and you guys have the best trend lines in the business to be able to draw. It's just anchor it at one point, push it up, touch 3 points, and boom. I feel like I'm, a charting expert when I do that stuff. But
no, I've heard of her.
She's good.
Yeah.
She's good. She definitely knows what she's doing. I think she has some clickbait stuff, but she puts out there a lot of like basic, very good fundamental education about trend lines.
That's cool. That is cool. But yes, I actually do have the call. I just registered for it. Starts in 23 minutes. So I'll go and stream that for everyone out there. A lot of people seem to be wanting to hear more and more about Nike. So we'll definitely stream that for you guys, and we'll hop off when that does go ahead and start, because the forward guidance will be important. I mean, again, we were talking about it earlier. This is not, again, I'm with you on this, Gary. I'm absolutely not trading Nike in this disgusting downtrend. It's down on a double B on earnings because of China sales declining. Maybe they'll have good forward guidance, but even then, I'm not going to be interested in this until the chart stops looking absolutely disgusting. So
I think there's so many good stocks out there right now. And even the AI stocks that have pulled back, so many good stocks with great stories, with great management, great earnings, and good charts. I mean, to stick with Nike, it just seems to be. I mean, could it be a bottom? Absolutely. But I'd make the case that you're better off waiting for 10%, even 20% upside and see some of those moving averages. And Chandi, I think, would agree with me. I think Peter, all of your investing legends would agree with me. I saw Warren Buffett go into Google, not Nike.
That is true. They are going into the stocks that are trending. I mean, yeah, like you said, it could be a bottom. Absolutely. Like if you look at here, like zoom, we're way out. We're trading basically at like the 2016 levels right now. So like, yeah, if you're going to be buying this, it's more of just something that I guess you want to just
pull up something like Ford or AT&T or Verizon. These are stocks, GE to a certain extent, even though that one's come back. But these are stocks that I think Nike kind of fits into.
Really?
And, they're stocks that I think, I don't know, is Nike in the Dow?
I think it used to be for sure. Let's take a look. If you guys wanted to find what is trading in any of the indexes, actually, that's the default index is the Dow Jones 30. So all you have to do, I'll show you guys again, to find what's in an index or an ETF, I should say, you just add a watch list. I'll add it to the left, maximize it. And here's the stocks in the Dow Jones 30. And yes, Nike is in the Dow along with these other 30 stocks. You can do the same thing to find out what is trading in, for example, the S&P 500 index. Any index really you want, even sector ETFs like, I don't know, XRT for retail. You can find that out right there just using our pre-made watch list. And you can see it does say system, which means it's automatically updated based on what that ETF is holding. So very, very nice feature.
Mikey,
to use.
Mike, I will tell you. I asked AI, and
Mhm.
it differs. It says Nike's not in the Dow.
Did they
It
remove
says
it? Really?
Nike was added to the Dow in 2013, but replaced by Nvidia on November 8th, 2024,
Oh, damn.
due
Huh.
to a 10-for-1 stock split impacting price weighting calculations.
Interesting. I'll have to ask Dev about that then. Let me see. Really? Because I see it on the Dow
Let me
30 on the
see. Let me look.
CNBC holdings list as well.
Let me look. Maybe again, AI.
Oh, you
When you're
asked
not using
AI.
Sidekick, yeah, ask Sidekick.
Well, that's Sidekick.
Although
Yeah.
it's going to use the data that's in there.
Yeah. But it is on the CNBC one. Let me check one other one.
Yeah,
And
one other AI is saying that it's not included either.
this one is saying it's 29 on Slick Charts. The first two ones on Google. You can also look at the DIA holdings.
Yeah, true. Let's see.
I'm not sure if we also have that. Yeah, Nike. Actually, DIA US holdings. Nike is in there.
Interesting. So Perplexity is wrong.
Yeah, you can't always trust AI.
Yeah.
Cannot always trust AI. Yeah, well, that's Sidekick. Why? Whoops. Is Nike in the Dow Jones 30? This isn't really something most people would probably use a message on for Sidekick.
No,
Because it's
I
so
wouldn't
basic.
suggest it.
Yeah, yeah.
Go and ask
But,
Perplexity and it'll tell you no.
oh, that was very quick. Yes. Yeah, that was easy. And Nike continuing to fall in after hours. Let's check out FedEx again because FedEx is looking good. Had a double beat. Yeah, it's surprising Dow or Nike's still in the Dow considering how bad it's been. Let's take a look at the Dow. I never honestly look at the Dow Jones like that anymore. It's been pretty good.
Well, look at the year-to-date changes in the Dow. I mean, that's an interesting one because you got, I think Caterpillar might be the top gainer in the Dow for the year.
Yeah. Let's see.
Yeah, and you're right. CNBC lists it on there as Nike as well.
Okay, it starts here. Dow's like 12% up, give or take.
Dow is underperforming, I think, the S&P and QQQ.
Usually does.
Yeah. But that's over year to date. If you look at like the last month or 3 months, it's completely outperforming. I think IBM is one that's done well in the Dow.
You can actually, something I've been doing recently, Gary, is using our market scanner. I'm going to say find stocks in the Dow Jones 30 that have a RP greater than 90.
Oh.
So we can find the top performing stocks in the Dow. I actually dropped a little clip on this not too long ago, just how to find the top performing stocks in any ETF or sector. This is what the top stocks in the Dow are. We got Intel, Goldman Sachs, Caterpillar, like you were saying, and Johnson and Johnson.
That one shocked me. I got rid of Johnson and Johnson, I think, last year in my portfolio after holding it for years and years and years.
Yeah. Yeah, it's a cool way to go and find that. And yeah, Nike. How much is Nike down in after hours right now? It's down about 5%. Nothing too bad. But on a double beat, it's not what you want to see. Again, if you guys have just joined in, it's because of this news right here that the Nike Q2 China revenue declined by 17%. And then we're going to be on the call. It starts in 15 minutes, and they should be providing some forward guidance for Nike pretty soon.
It's funny. I'm looking at somebody asked about Netflix below. And
I was actually just seeing that too. Let's take a look at Netflix while we wait for this Nike call to start.
I'll tell you, my horizontal line on this one is 103, and it broke through that. And so I'm waiting for really to get the 4-hour algorithm says buy it at 94.27 and you're trading at 93.
Mhm.
I haven't seen it change. So on a 4-hour, I haven't seen the direction change yet. It's still going down. I don't want to, but the trend is your friend. I want to buy when the trend is going up, not when the trend is going down. Even though the 4-hour algorithm has a pretty good track record on this one, 103% over the last 2 years versus 101% buy and hold. So it's okay. You win 42% of the time. So it doesn't have that over 50% win rate, which would kind of indicate to me that and look at that trend line. I mean, you've broken the upward trend line. And I think there is a stock that your social team has been posting about trend lines, and maybe that one's it. I forget.
Maybe.
That
I'm
one.
not sure. But yeah, a lot of things like Google has been killing it lately, but ever since late November has not been killing it. So I'm actually kind of curious. I just typed into our market scanner, find stocks trading within 2% of their 100-day highs, just so you can see stocks that are actually trading higher.
Simon Property Group, I love. AIG just came up. By the way, AIG, that's a stock that in 2009 I traded for immense gains.
Nice.
That was around the housing crisis, and it was reported that the government was starting to put money into it, like Fannie and Freddie. But the gap still exists on a weekly chart, on a monthly chart, I think, from 2000. It might be weekly. Try weekly. I think the gap still exists from weekly from 2009, though. Yeah, there's the gap.
Brutal.
Yeah, I traded at the bottom there. I mean, that volatility was fantastic to trade back in 2009.
I absolutely believe it. McDonald's. Got McDonald's trading basically near within 2% of its all-time highs. Capital One.
Citigroup. Love Citigroup.
Citigroup.
Mike Mayo, who is Wells Fargo's bank analyst, he called Citigroup the best for 2025. He's right. It's up, I think, like 16, 17% in 2025. But he said, hey, in 2026, Citigroup also outperforms.
Nice.
Let me see what's Citigroup up year to date.
When the market is trending down, this is how you can find stuff that is currently hitting highs. This is only the S&P 100, but you can search through it, basically the entire market. But I think these are some pretty good
Citigroup is up 61% year to date.
Yeah, it's been doing great. Another thing you can do that I like to do is use the stock market map as well. Let's see what's outperforming today. It's been silver for a while. Silver's down on the day, but on the week, man, it's just been crushing it over the last few weeks. Another gap up like yesterday, but it's down today. What was up? Looks like semiconductors were up the most today, 2%. Nice move on semiconductors today, the SMH ETF. Consumer discretionary is also up good. Bonds were up. And energy and silver were leading the downward movement today. On the week, it looks like silver and bonds are leading the charge. Silver and bonds, so it's definitely obviously risk off. Healthcare down slightly. And tech, semiconductors, and energy are performing the worst. So interesting. I've been seeing some more and more stuff about TLT lately, the bond treasury ETF, across Twitter and whatnot.
Honestly, I've never even owned that one. I mean, I know about it. It's one of the favorites, but I've never owned it. The only reason I've ever owned SGov, which is another favorite of that kind of crew, is because SGov, it actually is tax. It's a tax-free one. So if you live in a state with taxes, like you live in California, and say, for instance, you get a high yield savings account, you have to pay taxes on that interest. Yep. You don't have to pay income tax on SGov.
Yeah, or you can just buy the T-bills directly too for that tax benefit too. I didn't realize
Yeah,
the ETFs are
it's
like that. I actually have some. I have like a daily deposit into T-bill just as for cash. So that's actually I didn't even realize that it's taxed better, which is nice.
Dan, this guy's not risky enough.
Well, that's just my
What the
cash.
hell are you working at Trendspider for, Mike?
That is just my cash. Just my cash. I got plenty in stocks as well.
Good God. Let me see. I'm gonna look at.
I used to sell options on, and you sell options and you have a higher tier margin account, it uses practically none of your money. So you can put most of it in T-bills, which is really cool. Used to do that.
Wow.
I feel like to sell puts it takes about 20% of the capital, which can be, pretty dangerous if you over leverage yourself, of course. But if you're smart about it, yeah, you can run T-bills and sell puts.
That's
sell
a lot of
options.
work.
Yeah.
I've never put that much work into it.
Yeah. Selling puts is cool. I like to sell some covered calls still too. Every once in a while. But I'm mostly just equity now. Wow, look at Nike just bleeding until this earnings call, which starts in 9 minutes. So
Which is
Gabriel
what
probably hop
Sidekick said
off.
it would.
Yeah.
Sidekick said it would.
Mm-hmm.
I mean, for me, again, I've never been a fan of Nike. I don't like what the stock is doing. But ever since earnings, so the first, I guess it was 416, the 1 minute candle, 416. You had a green candle that was up 0.3%. That's the only candle that is above a 9 EMA on a 1 minute.
Yeah.
You put a 9 EMA and you're literally bumping right up against that as resistance. And so for me, it would just be, I mean, you've look at how perfect that is.
Yeah. 9 EMA is widely used. It's a good one. 9 and like the 8. Not a huge difference, but definitely a good short-term trend indication there. And you can see it's clearly reacting off it for several occurrences. And yeah, you're right. That's the only single candle that did go above it. And yeah, if you're like, for example, for whatever reason, shorting this in the after hours session, you could use
You'd
it
love it.
as a stop loss. Yeah.
Yeah, you'd love that 9. Not that I use the 9 EMA as my confirmation. So for whatever chart I'm on, if I'm going to trade something, it better be above that 9 EMA, whether it's weekly, whether it's monthly, whatever. In fact, the Qs I've told people for the last I guess a month, maybe a month and a half. If we go below on the QQQ, if you go below that 9 EMA, that's when you I'm sorry, not on a weekly, on a monthly. If you go below that, yeah, pull up a chart of QQQ. Go to a monthly chart of QQQ with that 9 EMA on it, and you'll see that to me means that we've broken trend.
Yeah, no, for sure. It looks
And you
like
can
it
see
reacts pretty well to
2020.
it.
Look at 2022. I mean, 2021 looks like 2025. And then you had that pullback in 2022. Now, it's a whole different market. 2022, the Fed was raising rates. 2026, the Fed is going to be cutting rates. So it's a whole different market. But if I'm looking at 2021 and saying, well, the market's similar, I may want to look at pulling some things out when I get to that 9 EMA.
Yeah, for sure. Use it as a stop loss, use it as a trend indicator. That's what basically Shonday was talking about on our interview, because yeah, it doesn't matter what it is really. If it's a 9 EMA, it's a 50 SMA, you just got to find something that you like that makes sense to you. And if you're wanting to follow a trend, you don't know when to get out, just throw one of those on your chart. And you can see right here, it will get you out, maybe early, maybe late. But the idea is that you have a system that you can follow over and over again. And it can be as simple as, like, I'm pretty sure if you test a strategy on the QQQ, I'm just going to do above 200-day SMA. So your entry criteria will be above the 200-day SMA. And then exit condition below 200-day SMA. I'm pretty sure this is like a pretty damn good strategy from the last time I back tested it, at least. Let me go ahead, close out that. Let's go over here. Oh no, we're going to go on the daily chart. Go all the way back here. And this is a strategy as simple as it comes. Yeah, it used to outperform, but basically the idea with trend following is that you're going to catch onto the trends. You're not going to buy the bombs. You're not going to sell the tops. And this is like one of the most basic ways to do it is just go long when the stock is above the 200 SMA and get out when it's below it. As you can see, right when it breaks below, you exit the next day. And it's been pretty good. Obviously, the win-loss is not good, but the risk to reward is what you're going for in trend following.
What? And you're limiting your downside.
Exactly. That's the main thing. You get 57% max drawdown versus 83%. That is the main benefit of trend following, is that you limit your downside, which can make trading through these downturns a lot better.
I mean, if this were the schoolyard and you were putting in that strategy, Mike, I would completely peer pressure you and say, "What are you, a P?" I mean, again, schoolyard stuff, because you got to have, in order to be in QQQ, you've got to have some stomach for volatility. I mean, go into VOO if you want, just or
just
one of the other ones. Yeah, one, but QQQ, you need to. I mean, shit, QQQ over 10 years. Let me see what that one is up in 10 years.
Do you have the earnings call starting in a few minutes, by the way? So probably hop off in a few minutes.
So 10 years in QQQ, you made 433%.
Yep.
And you're telling me over the last month, when you're even over the last month, you're still up 2.42%. 6 months, you're up 16%. Year to date, you're up 19%. 5 days, you're down 1%.
Yep.
I mean, again, I think a lot of people watch these charts, and I'm not one of them. I set my alerts with Trendspider, and that one of the reasons I got Trendspider was so that I didn't have to stare at charts all day. I have a strategy, I have a system, and I'm perfectly happy with it.
Yeah, same here. I don't even open my broker some days because my alerts just literally, I got to buy stuff the day before, and then I set an alert, and it goes to signal stack, and it gets me out when it breaks my stop loss, and that's it.
It's as simple as that. And like you said, just putting it in place, rules-based works. And if you've got a rules-based portfolio, it's the best thing to have, because then you're not stressed out over making decisions. And I don't use stop losses. And the reason I don't use stop losses is because I think there's more than just price that affects a stock. So market sentiment can change that a lot. Is Nike actually moving up now as we get to the call?
It's breaking above the 9 EMA. The call is starting in 2 minutes. We'll have it streamed live for you guys. So if you guys have any questions, let us know. If you guys are still sticking around, make sure to like and subscribe. Check out Gary from Daily Stock Picks in the description below. You can check out his Substack, his YouTube. Goes live on Spotify basically every day for his podcast. So check him out. Subscribe to our channel because we have them on a lot. We're always going live. Both of us are going live all the time. So
didn't Sidekick say Nike at 62?
Yep.
It turned up at 62
or something. Yeah.
It turned up right at 62.
Yep. And it said that's your buy area if it dips and it has a beat on earnings.
And wait for the call.
And wait for the call. That was the second one. So it's saying if forward guidance is good. Let me pull it up.
Sidekick is so good.
I love it.
I mean, honest to God, during that Black Friday sale, I was telling people you get just buy the trial. And I think you guys have a trial now for $19.
Yes. We just dropped a link for it.
Yeah.
So you can use the link down in the chat below to try out the platform we're using, Trendspider, for just $19. And you can save up to 66% during our holiday sale. So absolutely take advantage of it. It's literally $19. and you can try out a whole new platform for 14 days. You can also just cancel if you don't like it, but it's a great platform. Go ahead.
That's the thing. Just go to Sidekick and have it analyze your portfolio or stocks that you're looking at, and then cancel after 2 weeks.
That's fine. Yeah. I mean, you can get free messages of Sidekick here. Highly, highly recommend you guys try it out. That's literally cheaper than a ChatGPT subscription. And if you're using it specifically for trading, I promise you, there's no better LLM on the market than Sidekick. There's no way. I use AI constantly every day, and I don't even think about using a different AI for anything stock market related anymore.
The only hack is use ChatGPT or Perplexity or whatever you want to create the prompt for Sidekick.
Yeah, no, that's a great.
So you don't waste your messages.
Yeah, it's a great call. That is a great call. Oh,
you turn on the call now?
The call, yeah, I hear the music in the back. Let me actually, it should be starting. I'm gonna remove my screen and then put it on with audio. Stop that.
I am not hanging out for this call.
Yeah, no,
Mike, I don't think I've ever listened to a learnings call.
And welcome to
all right, it's starting. So
second quarter
we're probably going to hop off. Everybody out there,
Diddy
enjoy the earnings call.
You'll find it at investors.nike.com.
And
leading today's call is Paul Trussell, VP of Corporate Finance and Treasurer. I'd now like to turn the call over to Paul Trussell.
Thank you, operator. Hello, everyone, and thank you for joining us today to discuss Nike Inc.'s second quarter fiscal 2026 results. Joining us on today's call will be Nike Inc. President and CEO Elliott Hill and EVP and CFO Matt Friend. Before we begin, let me remind you that participants on this call will make forward-looking statements based on current expectations, and those statements are subject to certain risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are detailed in Nike's reports filed with the SEC. In addition, participants may discuss non-GAAP financial measures and non-public financial and statistical information. Please refer to Nike's earnings press release or Nike's website, investors.nike.com, for comparable GAAP measures and quantitative reconciliations. All growth comparisons on the call today are presented on a year-over-year basis and are currency neutral unless otherwise noted. We will start with prepared remarks and then open the call for questions. We would like to allow as many of you to ask questions as possible in our allotted time. So we'd appreciate you limiting your initial question to one. Thank you for your cooperation on this. I'll now turn the call over to Nike Inc. President and CEO, Elliott Hill.
Thank you, Paul. Let me start by thanking all of you for joining on the eve of a holiday week here in the United States and many parts of the world. And with that, let me also recognize a Nike team that's leaving nothing on the table right now. When you work in retail, the holidays don't mean a break. When you work in sport, you often say that sport never sleeps. So when you work at Nike, you're in the thick of an incredibly busy time. With that in mind, I want to extend a special and heartfelt thanks to my Nike teammates. Thank you for your continued commitment, passion, and determination. And thank you for delivering another quarter of steady progress and building momentum. Fiscal year 26 continues to be a year of taking action to right-size our classics business, return Nike Digital to a premium experience, diversify our product portfolio, deepen our consumer connections, strengthen our partner relationships, and realign our teams and leadership. And I'd say we're in the middle innings of our comeback. We started with the Win Now actions, which was our immediate response to our biggest challenges and opportunities in our culture, product, storytelling, marketplace, and winning on the ground. And now our sport offense is the accelerator of our Win Now actions. It's how athlete-centered innovation travels across and through every country and channel to drive growth. Our focus on sport by brand is the engine of our growth. Our global marketplace is the amplifier, and it is our sport offense that connects the two. Said another way, our growth will come from sport, athletes, product innovation, sport moments, and will be scaled through countries, channels, and accounts. Turning to the quarter, I'd frame up the results as slightly better than we had anticipated 90 days ago. And while we're driving progress through Win Now, we're nowhere near our potential. I see three themes that give a better picture of where we stand right now. The first theme is that our sports teams are quickly finding their rhythm in the new sport offense. While right-sizing our classics, we're building a more diverse product portfolio, gaining the most traction in our performance business, which validates that we've got the right structure to drive a relentless flow of innovative product across our unmatched opportunities. The second theme is that we're building a healthier base for top-line growth. The Nike brand grew this quarter, and the mix was strong. We delivered 8% wholesale growth, elevated the experience in key Nike stores and Nike.com, and had fewer days of promotion. These are all positive signs. The third theme is that our comeback continues to move at different speeds. It won't be a straight line, but we're acting decisively to accelerate the lagging areas, with China at the top of that list. A year in, it's clear how important it is to stay closely connected to what's happening on the ground. From intern to CEO, and every role I've held in between, I've felt that way. Which is why, as you likely saw this quarter, I announced a change in my leadership team. All geographies will now report directly to me. I'm confident this change will result in us accelerating our Win Now actions by allowing our geography GMs to more closely shape our strategy, drive faster decisions, and influence investments. The geography that is leading the way for Nike right now is North America. As our largest business, that's where much of our focus has been. With North America, we're working with the most diverse wholesale landscape, which gives us several strategic partners to segment and differentiate our multi-brand, multi-sport, and multi-price point portfolio. The team has done an excellent job of reconnecting with partners and getting sharper on the consumers we serve and those that we seek to serve. This quarter, that approach led to over 20% wholesale growth in North America, with meaningful growth coming from existing partners. Our North America marketing team is also finding the right balance of inspiring through big team moments like the Dodgers World Series campaign after their win, or at the Chicago Marathon, where we supported everyone from everyday runners chasing personal bests to Conor Mantz shattering an American marathon record that stood for 23 years. North America is driving a healthy, repeatable offense and showing us what winning looks like. It's a great signal for our future success in other geographies. In Greater China, we highlighted last quarter that we were facing a longer road to a healthier business. We've been implementing the Win Now actions in our key cities of Beijing and Shanghai, leading with more storytelling of our product innovations, editing our assortments, and elevating the presentation of those assortments in targeted doors. What we've done is a start, but it's not happening at the level or the pace we need to drive wider change. The next step is to further adapt our approach to fit China's unique monobrand footprint and digital-first marketplace. The reset requires a fresh way of thinking from our Nike teammates and our Nike store partners, and it will take time. Over the years, we established our premium position and market share there because the Chinese consumer believes in our ability to innovate and inspire them through sport. I'm confident we'll get back to fulfilling that promise. China continues to stand out as one of the most powerful long-term opportunities in sport. That has not changed. Expect to hear, see, and feel much more about how we'll manage the China marketplace differently this fiscal year and beyond. Both EMEA and APLA are geographies that are led through distinct, influential countries and key cities. So we're moving quickly to resourcing our teams on the ground, including sales. They're the ones who deliver locally relevant assortments, elevate the presentation of those assortments, fuel product seeding and build local relationships, create meaningful stories and consumer connections, and ultimately drive profitable and sustainable revenue in both wholesale and direct. EMEA activated their sport offense on December 1st. So they just started rehiring these critically important revenue-generating roles in key countries. I'm locking arms with the leaders of our geographies and with Matt, who now leads sales and Nike Direct, to elevate the way consumers experience our brands. I know what it looks like when it's successful. I can see the upside. It's a brand by brand, sport by sport approach, paid off in a partner by partner, city by city, high street by high street, mall by mall approach. And every detail matters. Next, I'll share some color on how the sport offense is fueling a more diversified product portfolio through footwear, apparel, and equipment, and up and down price points. Our teams are determined to deliver a consistent product innovation pipeline. In January, Nike Running will build off of the strong start of our new stability shoe, the Structure 26, with the introduction of the Structure Plus. In Q2, running grew by over 20% for the second quarter in a row. It's up double digits in every channel, including Nike Direct. Also in January, we'll debut Nike Mind, a new footwear platform that will help athletes prepare for performance and competition, which we see as a new dimension to the Nike training's offense. We introduced Nike Mind along with 3 other new innovations platforms in October. One of them is the new platform that traps air for warmth in an ACG jacket. The jacket inflates from a shell to a puffer based on the warmth needed. The ThermaFit Air Milano jacket will debut at the Winter Olympics in February. Also in February, at the NBA All-Star Game in LA, you'll see an example of how our 3 basketball brands and their product lineups will come together under the sport offense. The swoosh, the Jumpman, and the Star Chevron have a unified creative feel and merchandising approach with Foot Locker in LA. And we believe it has great potential to be scaled. Our Nike Skims collection will launch internationally in EMEA and APLA in the same time frame, following a successful rollout in North America. In Nike football, the deeper investment in World Cup starts now. This quarter, we brought a fresh perspective to the culture of the game in a T90 collaboration with Palace and with our Hollywood Keepers sportswear collection. And in March, our athletes will begin wearing our new apparel platform, AeroFit, in their national team kits. AeroFit is like air conditioning for the body, flowing air through the garment, unlike any previous performance apparel. The innovation platform will scale across several sport dimensions in coming seasons. Overall, wholesale partners are very confident in our Nike football product. Booking units are nearly 40% higher than World Cup 22. To help sell through the commitment, we'll refresh over 100 Nike Direct and 1,400 partner doors around the world, and our marketing team is making significant investments to inspire football fans everywhere. All of these new concepts will come to the consumer in the back half of the year. As a result, our order book is improving season on season. Through the sport offense, we're on our way in product. But as I've said, near-term investments to clean up and elevate the marketplace have put real pressures on margins. Tariffs have also obviously added a significant headwind to overcome. I want to state it very clearly. Margin expansion is a top priority for me and my leadership team. While it will take time, we see the path back to double-digit EBIT margins for Nike Inc. That formula includes a multi-branded and diverse product portfolio that is constantly refreshing and bringing in newness and seeking to drive value out of every relationship we have in the marketplace. It also requires us to be bolder and more creative in how we operate. I made another change within my leadership team this quarter, asking Venkatesh Alagira-Sami to be in the role of our Chief Operating Officer. He and his team will look end to end to ensure technology is fully integrated across the company and how we create, plan, make, deliver, and sell our world-class innovations. We see significant opportunity to get our core operations running more efficiently and more profitably. I look forward to sharing more in the coming quarters. With that, I'll turn it over to Matt to go deeper into the quarter and then offer some closing thoughts before we take your questions.
Thanks, Elliott, and happy holidays to everyone on the call. Our second quarter results demonstrated the resilience of our portfolio, with modest year-over-year reported top-line growth, despite managing headwinds from the actions we have taken to reposition our business. As I look back on where we are, 1 year from Elliott joining the company and moving forward with our Win Now actions, our business is in a better position. Sport dimensions represent a larger mix of the portfolio, led by running, and we are seeing momentum build in other sports. The Classics footwear franchises are on track to decline from peak levels by more than $4 billion by fiscal year end. Wholesale has returned to growth, with a growing order book globally in both spring and summer. Nike Digital has reduced promotional activity and is operating more strategically in sync with our partners. And inventory is in a healthy and clean position in North America and EMEA. While we are encouraged by all of this, as we have said, our progress will not be linear, as each brand, sport, and geography is recovering on a different timeline. And we continue to read and react every day in service of the long-term health of our brands. We highlighted last quarter that it will take more time to return to healthy growth in Greater China and Converse, and we expect headwinds to continue for the balance of the fiscal year. There are also puts and takes across EMEA and APLA. Meanwhile, North America and running stand out again this quarter, and we are growing more confident in our ability to sustain the momentum as we look forward. Being in the middle innings, as Elliott referenced, also means it will take time for the actions we have put into place to change the trajectory on EBIT margins. We have been navigating transitory headwinds to margin due to our Win Now actions and shifts in the business, including product and channel mix and continued inventory liquidation. As we highlighted last quarter, we are also navigating new structural headwinds from the $1.5 billion of annualized incremental product costs due to higher U.S. tariffs. This represents a gross headwind of approximately 320 basis points to gross margin in fiscal 26. And while we have begun to take actions to reduce this to a net impact of approximately 120 basis points, it is still a significant factor impacting our near-term EBIT margins amidst a turnaround in a very dynamic operating environment. All in all, we have made meaningful progress through our 5 Win Now actions, yet there is more work to do, and our teams are hustling. For this quarter, revenues were up 1% on a reported basis and flat on a currency-neutral basis. Nike Direct was down 9%, with Nike Digital declining 14% and Nike Stores down 3%. Wholesale grew 8%. This included a top-line headwind of approximately $550 million from the reduction of our Classics franchises, down over 20% versus the prior year. This means our currency-neutral revenue grew 6%, excluding the impact of this headwind. Gross margins declined 300 basis points to 40.6% on a reported basis, primarily due to increased product costs due to higher tariffs in North America, as well as inventory obsolescence in Greater China that was not contemplated 90 days ago. SG&A was up 1% on a reported basis year over year, driven by higher brand marketing expense, partially offset by lower operating overhead. Relative to expectations, SG&A was lower due to operating overhead savings, reflecting the team's continued focus on disciplined cost management. Our effective tax rate was 20.7%, compared to 17.9% for the same period last year, primarily due to changes in earnings mix. Earnings per share was 53 cents. Inventory decreased 3% versus the prior year, with units down high single digits. In North America and EMEA, which represent almost 3/4 of our business, we have returned to a healthy marketplace. We still have work to do in Greater China, parts of APLA, and Converse. Now I will turn to the geographies and once again focus my remarks on specific context and insights of our Win Now progress. In North America, Q2 revenue grew 9%. Nike Direct declined 10%, with Nike Digital down 16%. Nike Stores were down 2%. Wholesale grew 24%, and EBIT declined 8% on a reported basis. As Elliott said, North America is our best example of executing our Win Now actions, and we are taking the learnings from their playbook to execute across all other geos. Momentum is extending beyond running into additional sports, including basketball and training. As it relates to the North America marketplace, wholesale delivered strong growth in the quarter. While the quarter certainly benefited from liquidation to value channels as we cleaned up the marketplace, we also saw a balanced contribution of growth from both new and existing partners. North America also made additional progress on repositioning Nike Digital to a more premium representation of the Nike brand, with fewer days of promotion, lower markdown rates, and increased demand at full price. Nike.com posted its best Black Friday ever this year, partially driven by strong sell-through of the Jordan Black Cat launch. Growth in the quarter was driven by running, kids, basketball, and training, with running delivering high double-digit growth in Nike-owned stores, Nike Digital, and wholesale. Sportswear saw sequential improvement, up low single digits in the quarter, with classic footwear franchises declining approximately 20% year over year. Inventory declined mid-single digits versus the prior year, with units down double digits. Closeout units declined double digits, and the mix is very healthy. Last, I want to point out that North America gross margins only declined 330 basis points versus the prior year, despite 520 basis points of impact from new U.S. tariffs. This gives us confidence that our Win Now actions are working, profitability is recovering, and we are on the path back to sustainable, profitable growth. In EMEA, Q2 revenue was down 1%. Nike Direct declined 3%, with Nike Digital down 2% and Nike Stores down 5%. Wholesale was flat. EBIT declined 12% on a reported basis. EMEA has maintained a healthy marketplace, although promotional activity has been heavier than expected. We saw growth in Central and Eastern Europe and the Middle East, offset by slight declines in Western Europe. In Q2, our performance business continued to build momentum, driven by double-digit growth in running. We also saw growth in training and sportswear. Sportswear growth was driven by apparel, with footwear flat, as a mid-20s% decline in classic footwear franchises was offset by growth in Air Max and the look of running styles. Inventory grew double digits versus the prior year, with units flat, and the spread primarily due to foreign exchange rates. Closeout mix in the geography is healthy. In Greater China, Q2 revenue declined 16%. Nike Direct declined 18%, with Nike Digital down 36% and Nike Stores down 5%. Wholesale declined 15%. EBIT declined 49% on a reported basis. Our priority in Greater China is to create greater brand distinction through sport and innovation, leveraging deep local insights in a premium and more consistently managed integrated marketplace across both physical and digital channels. Over the past several seasons, we have faced consistent challenges with declining store traffic, softer in-season sell-through rates, and higher levels of aged inventory across the marketplace. Our brands have consistently been off price for consumers, especially in digital, affecting our premium positioning across the entire integrated marketplace. These challenges resulted in a higher mix of off-price sales with higher markdowns, higher sales-related returns, higher wholesale discounts, and higher obsolescence charges to clean marketplace inventory levels. This cycle has had a significant effect on the profitability of Greater China. This quarter, we took the following actions in China. We continued to obsess our initial Nike Store pilot, which delivered encouraging results this quarter, with better traffic and comp sales growth relative to trends across the broader fleet. We focused on sport, combining new product innovation with elevated retail presentation, and we saw running continue to grow in the quarter. We were less promotional during 11/11, resulting in an approximate 35% decline versus the prior year, in line with our plans. We accelerated returns of aged inventory owned by partners and wrote off both partner and Nike inventory in the quarter. We reduced Nike inventory by mid-teens versus the prior year and by 20% in units. And we reduced our sell-in plans for spring, and we cut our buys for summer to improve sell-through and full price realization. We will need to make further shifts in the integrated marketplace to break the cycle that we've been managing through. There is more work ahead to scale the momentum of the initial store pilot to more doors, to elevate our brands across all digital platforms, and to clean up excess product in the marketplace. We expect headwinds to continue, but we are working to set the foundation for a return to growth in this important geography. In APLA, Q2 revenue was down 4%. Nike Direct declined 5%, with Nike Digital down 10% and Nike Stores up 1%. Wholesale was down 3%. EBIT declined 15% on a reported basis. APLA continues to deliver mixed results across countries, with positive results in Latin America more than offset by headwinds in Asia-Pacific countries. During the quarter, the team leveraged promotions to make progress on pockets of excess inventory in the marketplace. In the quarter, running grew double digits, and apparel grew mid-single digits overall. Inventory grew double digits versus the prior year, with units up mid-single digits, though we saw pockets of improvement year over year. Now I will turn to our third quarter guidance. We continue to operate in a dynamic environment, both for consumers and our global business, and we remain focused on what we can control to make forward progress for the long-term health of our brands. Our outlook reflects our best assessment of these factors based on the data we have available to us today. We expect Q3 revenues to be down low single digits, with modest growth in North America as we see reduced liquidation activity versus prior quarters, performance in Greater China and Converse similar to Q2, as well as a 3-point benefit from foreign exchange. We expect Q3 gross margins to be down approximately 175 to 225 basis points. However, excluding the 315 basis point impact of higher gross product costs related to new tariffs, gross margin expansion would be positive in the third quarter. We expect Q3 SG&A dollars to be up low single digits due to higher demand creation and investments in our sport offense. We expect other expense, net of interest income, to be an income of $0 to $10 million in the third quarter. Now I'll close with a few final thoughts. We are making progress in the areas we focused on first, and we are increasingly confident in our path forward, led by momentum in North America. We are making the investments required to position our full portfolio for a recovery and making decisions in service of the long-term health of our brands. Operationalizing the sport offense, elevating the marketplace, and rebuilding our key city teams are critical priorities to return to sustainable, profitable growth across all brands, all sports, and all geographies. Finally, as you heard from Elliott, we are focused on improving the profitability and operating efficiency of our business and realigning costs while also investing to reignite growth. We look forward to sharing more in upcoming quarters. With that, I'll pass it back to Elliott.
Thank you, Matt. This quarter, the Los Angeles Dodgers reminded us what it takes to win at the highest level. Back-to-back World Series titles, something no team had done in 25 years. They gave us a Game 7 for the ages. They didn't take the lead until the 11th inning. Down 3-0 early, every outside voice said, "It's over." But they kept chipping away. Every setback became a lesson. They leaned on each other. They believed when belief was hard. Manager Dave Roberts shared those insights with us at the opening of our new Nike store in Portland, just days after that win. He talked about what guided his decisions, not just analytics, but trust, feel, and sacrifice. That included putting in bench player Miggy Rojas, who hit an improbable home run in the ninth, followed by a bases-loaded throw to the plate in the bottom of the inning. With one more out to go, Roberts swapped in Pajas, who immediately made a leaping, game-saving catch. Every decision mattered, and every player was ready when called upon. But the boldest move he made was managing Yoshinobu Yamamoto's innings, our Nike guy and World Series MVP, who won a historic 3 games in the series. The day after throwing nearly 100 pitches, he surprised everyone to close out Game 7. That wasn't just effort. That was a statement. I'm leaving nothing on the table. It inspired the entire team. That's what greatness looks like. It's not about perfection. It's about perseverance. It's about sticking to the plan and performing when the pressure is highest. Nike is in a similar moment. We're the industry leader. Expectations are high. And yes, we face pressure and setbacks. But like the Dodgers, we're leaning on each other, focused on the fundamentals, making the hard calls, and building for the long game. Because in the end, greatness isn't promised. It's earned. And we're ready to earn it again and again. Thank you. Now Matt and I will take your questions.
We will now begin the question and answer session. To ask a question, press star, then 1 on your telephone keypad. We kindly ask that you please limit your initial question to 1. Our first question will come from the line of Matthew Boss with JP Morgan. Please go ahead.
Great, thanks. So, Elliot, you led both in the release and on the call by citing the turnaround is in middle innings. Could you elaborate maybe where you've scored runs so far versus where you have opportunity remaining, and just your overall confidence today that you can win the game? And then, Matt, if you could just elaborate on the components of gross margin that you cited. I think you cited underlying expansion, excluding tariffs, for the third quarter, and just the progression that we should think about moving forward.
Thank you, Matthew, and appreciate the question. And let me start by saying the path back to sustainable, profitable growth is going to go through our win now actions, and they will be accelerated by our sport offense. And I would also say that I'm incredibly inspired by the way our teammates have responded to the actions in the new offense. The drivers of our growth right now for Nike, they came through the win now actions, which were our near-term actions around culture, product, storytelling, the marketplace, and winning on the ground with consumers. But it's our sport offense is the accelerator of those actions. It's how we take athlete-centered innovation, and it travels through every country, channel, and account to drive growth. And the sport offense is what's bringing the balance to our portfolio. We have a relentless flow of innovative product now coming across our three brands through multiple sports, performance and sportswear, men's, women's, and kids, and we pay it off across 190 countries. So we've had some meaningful progress, Matthew, over the last 90 days. Nike brand is growing. Sport is growing, with running leading the effort there at up over 20% and taking market share. We're beginning to diversify the portfolio, right-sizing our classics. As Matt said, we declined roughly $4 billion from its peak. North America grew 9%. Wholesale grew. Our order book for the spring and summer is up. So we have a healthier base from which to grow profitable, sustainable growth. So in terms of the middle innings, specifically, I think the best way to think about it is that we have our businesses, the dimensions of our businesses moving at different speeds, and the timelines are going to vary by geo, channel, and sport dimension. So by brand, as an example, Nike is off to a strong start. We had growth this quarter. Jordan, I think, still has some room to dimensionalize beyond streetwear into things like Jordan basketball, Jordan training, etc. But we've seen some real good progress around streetwear there. We're resetting the marketplace for Converse under new leadership. In terms of product, performance is growing, but sportswear is still in the early stages of diversification. We've done a great job of right-sizing the franchises, but we still need to diversify that portfolio, middle innings. And then from a geography, North America's leading. EMEA just transitioned to the sport offense, followed by APLA, which, as Matt pointed out, had some mixed results. And then China has our longest road ahead. And that's why we're sitting there saying we're in middle innings. Great success in North America, work to do in China. But all I would say here, just to sort of close it out, Matthew, is the middle innings, while we keep saying we're in the middle innings, I will say this: the win now actions and the sport offense is working, and it will lead us back to profitable, sustainable growth.
And Matt, as it relates to margins, I would just say that, our business is still in a transition in the middle innings, and we are navigating through both transitory and structural headwinds across the portfolio. But as Elliot said, we've made meaningful progress through the win now actions, and you can really see that in the progress that we made in North America in Q2. North America's gross margins were down 330 basis points, despite more than 500 basis points of a headwind to product costs due to the gross impact from the new tariffs. And so that's a marketplace where we're furthest along in repositioning digital. We're back to growth in wholesale, and we've made the most progress in cleaning up the marketplace. And so as I look ahead to Q3, we guided our margins to be down 175 to 225 basis points. That includes 315 basis points of higher product costs related to new tariffs. And so we expect expansion, excluding the impact of new tariffs, really reflecting the beginning of recovery of the transitory headwinds at the corporate level. And we continue to expect to see momentum building in North America, given where the state of the marketplace is. We're watching promotional activity in Europe, but inventory in Europe is in a healthy place. And then, as I mentioned, there's puts and takes across APLA. And we expect the trends in Greater China and Converse for Q3 to be relatively in line with what we saw in Q2 as we continue to take actions on both of those resets. And so I would say that overall, we're encouraged by the momentum and the progress that we're seeing, but we've still got some work to do.
Our next question will come from the line of Ike Boruchow with Wells Fargo. Please go ahead.
Thanks. Good afternoon. Thanks for taking the question. I guess maybe for Elliot, maybe a similar type of question as Matt's, but you've mentioned the recovery won't be linear several times over the past year or in transition, and it totally makes sense. I guess I'd like to know if you're able to share when you believe that maybe that caveat won't be needed anymore, and you'll be able to better kind of hold momentum, create better visibility for investors on what's clearly becoming a reset base of revenue and earnings. Thanks.
Yeah, thanks, Ike. Here's the best way that I would think about it is, each geo. Let's first start with the brands. Each of the brands are at different stages in terms of diversifying their product portfolio. We just got into the sport offense in September, so we got these small cross-functional teams. We're getting them up and running as fast as we can. Same thing's happening in the countries and key cities around the world. That's happening at different stages. And so we believe in the strategy, and we know that the path back to profitable, sustainable growth is through the win now actions. We also believe in the sport offense and our ability to create beautiful products and then pay it off in an integrated marketplace. We just have 3 brands in multiple sports and 4 geos in 190 countries, and they're all operating at different timelines. And so that's the reason why we keep saying that we have different timelines, and it's just gonna take time. So I will just sort of point to the place we focus first, which is North America, and we're having great success there. So we're confident in our path forward.
Yeah, and I just would add, Ike, that we said on North America that we're growing increasingly confident that we can sustain that momentum. I would also say that we've said that we believe we're going to drive modest growth in wholesale this year, starting to have more confidence in that dimensionality of the business. But what you also heard on the call today was that we took some unplanned actions in Greater China as we're navigating real time through some of the challenges that we see in some of the businesses that are under reset. And so, we're going to continue to take it 90 days at a time for now, to give ourselves the flexibility to make the right decisions for the long-term health of our brands. And, much of what we said today is consistent with what we've been talking about for the past couple quarters.
Our next question will come from the line of Bob Drbul with BTIG. Please go ahead.
Hi, good afternoon. If I could ask 2 questions. I think the first one is, on the commitment and sort of the focus on the return to double-digit EBIT margin. It's a big priority for you guys. Is there a timeline at which you could talk to, when you think you'll get there? And then I think the second question is just like part of that, I think, is on China. Long road ahead, Q2 revenues similar to Q3, similar to Q2. How deep a reset do you think is necessary in China? And are we near a bottom in revenue or EBIT declines in China? Thanks.
Okay, so Bob, let me do this. You stuck in 2 questions on me, but here's what I'm going to do. Let's take EBIT first, and then we'll take China, because I don't want to confuse the two. But let me first just say that improving margins continues to be a top priority, and I said it before, and I'll continue to say it. We do see a path back to double-digit EBIT margins. Margins are under pressure for 2 reasons. First, the driver of our win now actions, and that we've intentionally taken to clean up the marketplaces around the world. The second is the impact of tariffs, which were implemented after we activated the Win Now actions. And we're seeing the benefits of us taking those actions. We've said it, North America back to growth, running back to growth, wholesale up, the order book, and we have a healthier base for top line growth moving forward. In addition to the top line growth, we also have opportunity to improve the efficiency and productivity and how we operate the business. And we're going to share more in the coming quarters. Matt, I don't know if you want to add anything to that.
I would just say something that will sound familiar. We're clear on what the path back looks like. It starts with growth. And I think that, the investments that we've made to drive the Win Now actions are paying fruit. You see it with a second quarter of top line growth, and specifically the growth that North America was able to deliver in the quarter, which is where we'd focused our demand creation investments and where we focused our investments in our commercial teams in order to be able to get back on the offense in the marketplace. Part of what's going to drive expansion is recovery of our full price mix. As we continue to manage the off-price, full price mix in the marketplace. And again, I point to North America where we've now cleaned the inventory in the marketplace and we're starting to see margin expansion, excluding the headwind of tariffs. Another big opportunity for us is to leverage the supply chain costs as we grow. And that's been a meaningful headwind over the last year as our business has reduced in size. And growth will help us with that. But there's also a lot of a focus and attention on that as well. And then the last piece of it, I would say, is the work that we're doing to be disciplined in the way we're managing costs across the business. We've been investing in marketing, and we feel good about where we've leveled our brand marketing investment. We've locked in some of our most important team franchises for the long term, which strategically puts us at a great position in the world of sport. But we've been very focused on managing operating overhead, and we will continue to do that. And we look forward to sharing more about that in the upcoming quarters.
Okay, I'll jump back now and let me take China. China continues to be one of the most powerful opportunities in sport. We're confident that the Win Now actions and the sport offense will allow us to continue to invite 1.4 billion consumers into the world of sport, fitness, and the lifestyle sports. So we see China as a big opportunity. With that said, it's clear that we need to reset our approach to the China marketplace. And it's going to start with structure. The GEOs are now reporting to me. Angela, who's our GM in Greater China, is now part of my SLT senior leadership team. And I look forward to working with her and the rest of our team more closely. Let me share a little bit of the diagnosis of where we are. And we believe and firmly believe and will always believe that our growth will come through sport. But the reality is we had become a lifestyle brand competing on price in China. We also reduced the feet on the ground, people on the ground. And as you know, it's a mono brand marketplace with thousands of 5,000 doors, with the teams working the presentation of our product at retail. And we weren't making the investment in our store fleet. So our stores aren't compelling. And as Matt mentioned, the cycle that it started to feed itself, soft demand leading to consistent promotions and then impacting profitability. And we did signal last quarter because of these structural differences that China would be on a different timeline. So we're taking action. We're cleaning up the marketplace of aged product. We're getting back to the basics of retail, consumer right assortments, better storytelling, and elevated visual presentation. We're increasing investments in Shanghai and Beijing, resetting key doors. Matt referenced those in his prepared remarks. We're seeing early success. But I'll say this, it's not happening at the pace we like. So we have more to do. It's going to take a fresh perspective, a new approach, and we will have to come through this with new capabilities as well. And we're working closely with our partners at Pal Shan and Top Sports to adapt our approach. But I'll just sort of end here. I've done this before. I have a deep history in the market. We've diagnosed the problem, and we will return Nike to a beloved premium and innovative brand in China.
Our next question comes from the line of Anisha Sherman with Bernstein. Please go ahead.
Thank you for taking my question. Elliot, at the start of 2025, you expressed your strong confidence in the pipeline for running, and you laid out this 3x3 framework that you discussed with partners. And we're now seeing strong acceptance in the market, and the business is growing over 20%. As you look across the other verticals, I know you talked about new innovation across all of them, but how do you see the phasing of the growth? And are there particular areas where you have that same level of conviction that you had in running a year ago and where you expect the business to ramp very quickly versus some that are a little slower?
Yeah.
And then a follow-up on North America. Matt and Elliot, you both talked about the contribution of new distribution and same-store sales on the wholesale growth. Are you happy with the mix of partners you have now, or is the goal to continue to ramp up new distribution points into next fiscal year as well? Thank you.
Anisha, thanks for the questions. I'll start. Let me take the product portfolio piece first. Here's what I'd say. The teams are doing a really nice job of building a more diverse portfolio. You can start to see it in our numbers. We do have an unmatched portfolio with depth and dimension across performance and sportswear, men's, women's, kids, footwear, apparel, accessories, and up and down price points. And we believe that moving into this sport-obsessed teams through our sport offense, we're already starting to see the pipeline and the flow of innovation coming through across the three brands, Nike, Jordan, and Converse. So we know when we focus on sport, we win. You called out running already. I will hit very quickly that we launched Vomero Premium as part of that 9-box construct that you referenced this quarter and had very good sell-through. And we also launched Structure 26, our new in our stability silo, and we're launching Structure Plus next month. So we're continuing to fill that out. But it's not just about footwear; it's also about apparel. We have some really strong apparel coming through in running as well. So we will continue to grow and dimensionalize running as Nike running as a opportunity. In terms of other business opportunities, global football, it's probably the furthest along in terms of their construct. We have 3 silos there, footwear silos, the Mercurial, Tiempo, which will launch in Q3, and then our Phantom, which had a really strong launch in Q1. So 3 silos, also connecting deeply with each of the consumers that play a different style of football. Apparel and footwear also dimensionalizes that opportunity. National team kits, World Cup, really strong read there, 40% up on the order book versus World Cup 22. Training, 24/7 apparel, continuing to diversify the footwear. I see that coming. That's not yet hit, but we feel good about what's coming from training and footwear. Skims had a successful launch. We launched in EMEA and APLA next quarter. At basketball, we're dimensionalizing through women's, Sabrina, Asia, and now we have Caitlin coming. And our men's business continues to do well. Jaw sold through extremely well. And then we just launched the GT Future, and we had kids lining up for that shoe. So starting to dimensionalize beyond or dimensionalize the portfolio. And then I could dive into innovation a bit more further out. I think it's getting stronger every season. We're investing significantly in our Nike Sports Research Lab, and we're being intentional about connecting that R&D into our sport offense. And we announced a few big, which I talked about, product opportunity or product innovations, Nike Mind, and then AeroFit. So I feel good about the pipeline, and we see the response in our order book, which is up for the back half of the year.
Maybe I'll jump in on Marketplace, Elliot, and then you can add to it. Anisha, we feel good about the North America marketplace and our partners. We've got great partnerships. We've been working incredibly close with our partners as we're working to elevate the marketplace and reposition the Nike brand in a segmented and differentiated way across accounts and across the marketplace. Tom Petty and the team have just been crushing it in terms of leading us through our Win Now actions. And when I look at the order book for the back half of the year, the order book is very balanced in terms of growth between new partners and existing partners. And so we feel great about the quality of the growth that we see in the back half across a balanced, integrated marketplace. Our teams are always looking for opportunities because our marketplace strategy is a consumer-based strategy. We want to be in the path of the consumer, leveraging our partners across digital and physical, owned and partnered. And so I wouldn't rule out the possibility of it, but I wouldn't say that that's what's needed in order for us to be able to sustain the momentum that we see in North America.
I was going to add to it, but you've already embraced your new job, right? I think the only thing that I would add to it, Anisha, because I think Matt did such a nice job, is that Tom and the leadership team have done a really great job of just right-sizing the product, getting the marketing going. And then I would say the thing that's the big difference is the setting 3-year visions with each of, and this is into the details, but it matters, setting 3-year visions by account on the consumers that we want to serve by sport, and then bringing that back to 1-year plans and then to seasonal plans. And that's how you get back to driving profitable, sustainable growth with the partners. And again, the team's done a really nice job. So leading the way, and therein lies the opportunity in the other geos for us. We've got to get the other geos keeping pace, and we're working hard to do just that.
Our next question will come from the line of Jonathan Komp with Baird. Please go ahead.
Yeah, hi, good afternoon. Maybe one more on China. Do you think the North America experience where, Elliot, we saw, maybe 2 or 3 quarters of severe pressures after you came in and accelerated the win now actions, followed by now a return to growth and healthier conditions? Is that a reasonable timeline or playbook to think about China? And then just maybe bigger picture, if you are viewing some of these headwinds currently in resets more as temporary, maybe just expand on why not providing maybe 2 or 3 year out targets or a little bit more specificity around the timeline to get back to double-digit margins. Thank you.
Yeah, in terms of China, what I said earlier is we've taken actions, we're cleaning up, we feel good about having a handle on what has happened in China, and more importantly, what we must go do. And it's going to take a fresh perspective and a new approach, and ultimately some new capabilities. And so, and we're working with and through partners, which again, that's where it gets tough to put an exact date on it. But we're confident in the path forward, and the team that we have in place, and we're ready to get that business moved and turned as quickly as we possibly can.
John, I'd just say on your timing question, we're operating in a dynamic environment for both consumers and for a global business. And we're trying to turn around our business across 3 brands, multiple sports in 4 geographies. And as a result of that, it's complicated what we're trying to do. We're encouraged by what we've been able to do in North America. And I think we've got a clear path of what we need to do across the other dimensions of our business. But we're reading and reacting every day. And it's important right now that we've got the flexibility to be able to make the right decisions every week as we're trading the business in order to be able to establish the long-term health of our brands. And so for the near term, we're going to continue with this consistent practice that we've been doing. And as our confidence grows, we will certainly share greater insight into how we're thinking about the longer term.
Our final question will come from the line of Simeon Siegel with Guggenheim Securities. Please go ahead.
Thanks. Hey, guys. I hope you and your families have a very happy holiday and New Year season. So, Elliot, just to follow up a little bit, the North America revenue growth, it was just such a big number, even before accounting for the still large Classics reset. So can you just speak to what product is growing domestically so much that it was enough to accelerate that revenue growth this much and just way more than offset the ongoing reset? And then, Matt, it feels like the growing wholesale penetration should help that operating overhead, maybe structurally. So just curious if you could give us any thoughts where operating overhead goes. And then as you think about that opportunity, is the idea that you can take a portion of that and fund it back into demand creation, which has always been one of your key competitive advantages. Thanks, guys.
Yep. Simeon, thanks, and also wishing you and your family a happy holidays as well. In terms of North America growth, running obviously is a big piece, and it's not just growth, sell in. What we're encouraged by is sell through. We're actually taking market share, so we're feeling good about that. Global football, soccer, we're seeing growth there. We're seeing growth in training. Skims as well would be another one I'd call out. And then basketball. The team's doing a really good job with basketball right now. And again, I touched on a few, but like the GT Future this weekend was phenomenal. And while sportswear is not growing, they've done a really nice job of right-sizing sportswear and starting to diversify the portfolio across the look of running, which is primarily driving it. But we also have some footwear on the women's side in sportswear, Air Max Muse and the Superfly that's doing well. And then, of course, Jordan. I've got to call Jordan out. And when we speak about North America, they've done a really nice job. And we had a great sell-through of the AJ4 Black Cat. We're getting back to telling stories. By the way, that was our largest Black Friday ever. That Black Cat was a launch ever. And then just recently, it's not in this quarter, but the AJ11 Gamma, we had people lining up for that shoe again, which is fun to see kids lining up for sneakers again. So I think the team's done a really nice job of making certain that they're running a complete and balanced portfolio across the brands and sports.
Simeon, I'd just add that the growth that we delivered in North America in Q2 was certainly strong. And if you look at our guidance for Q3, we said that we expect modest growth in North America, and you can really sort of connect the dots between how much liquidation fueled the growth in Q3 versus what's going to be great comp full price growth as we get into the third quarter. And so hopefully that helps you connect the dots a little bit between the second quarter and the guidance for Q3. In terms of your question on cost leverage, yeah, absolutely correct. Growth creates leverage on the cost structure. Wholesale growth in particular creates meaningful growth on the cost structure, led by unit growth. And you see it not only in the supply chain costs, where you're shipping pallets of product to partners versus shipping one-on-one units to consumers, but you also will see it more broadly across our operating overhead. We're certainly focused on continuing to prioritize our investment in demand creation. I wouldn't lead that to believe that we've necessarily decided we're going to go much higher than the 10% of revenue at this point in time, because we feel like that gives us a good amount of investment to be able to continue to drive our brand forward. But if I'm prioritizing between the two, we certainly want to have more flexible liquid demand creation to create big moments that impact consumers, and to be able to activate that on the ground in key cities. And so we're going to continue to tightly manage costs on the operating overhead side. As Elliot said, we've got a number of things that we're looking at here, and we look forward to sharing more in the coming quarters.
And that will conclude our question and answer session and our call today. Thank you all for joining. You may now disconnect.
All right. Well, that was one of the worst earnings calls of all time. Nike is down like over 10. Is that down 12% now? Yeah. So I don't know. What do you guys think? If you guys are still out there, make sure to subscribe and like so you can tune into future live streams. But we're probably going to call it there for now. Wow. If you look at Nike here on like the daily chart, you can see it has a disgusting candle there. Chatting in the chats a little bit. We are pretty much at COVID lows. Is like the low was like 60. COVID low is about 60. We're at like 59 right now. So, I don't hate the idea, I guess, of getting that. It's not the way I trade. I wouldn't be buying this right now. Personally, it is in a nasty downtrend. I am the type to wait for a trend reversal back to the upside, but that is just me. But yeah, we're going to call it there for now, you guys. We'll see you guys in the next live. Make sure to subscribe so you guys can stay tuned for the next live, and I will catch you guys next time.